Good morning, traders. It is 8 a.m. Chicago time on Thursday, the 9th of October, 2014. Thanks, as always, for joining me here, listening in. Hopefully this is useful for you. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick rundown of the overnight news of a few interesting things. Last night, Germany's August trade surplus was below expected, came in at 14.1 billion versus 17.7 billion. Exports at negative 5.8% versus negative 4%, so that's worse as well. And imports at negative 1.3% versus consensus 0.9%. Also negative. So this continues a theme of several weeks now of German data coming in below or well below expectations, and that's the risk that the Fed was talking about, with Germany being the largest economy in Europe. That's the risk that the Fed was talking about, in addition to the growth in China and so on. So we just need to keep on top of that, pay attention to the German releases and key releases out of the UK as well. FOMC minutes, in case you were not around, were perceived as dovish. Big move yesterday, very large range. The FOMC sees global slowdown as risk to U.S. outlook, rising U.S. dollar seen as risk to exports and inflation rebound. A couple said strong U.S. dollar may have dampened inflation expectations. Officials called for patience on forward guidance as changes could be misinterpreted. Considerable time was not a fixed calendar interval. Wall Street Journal's Hilsenrath, he's the Fed watcher for the Wall Street Journal, says Fed officials are more concerned about overseas growth and a strong dollar. Fed will be flexible on how they hike rates. Australia's September employment missed. It came out at negative 29.7K versus plus 15K. Pretty decent swing there. The miss was driven by weakness in part-time workers. Possible new Ebola case in the U.S. Patients at Frisco Clinic in Dallas show symptoms. A nurse in Cairns, Australia, has been quarantined and tested for Ebola as well. We'll need to keep an eye on that. After the close yesterday, Alcoa announced its Q3 results. EPS at 31 cents. It beat pretty good. Beat by 9 cents the expectation of 22 cents. Sales are 6.24 billion versus 5.84 billion. It reaffirmed 2014 global aluminum demand. The product was up 2.5 or 2.4% in the after hours. The Bund has burst through prior highs to make new all-time highs by 17 ticks at 150.78, pushing yields on the 10-year German Treasury lower. It has since reversed. We'll have a look at the chart here in a minute. Why do we care about the Bund? Again, the flow of money is the lifeline of the economy, and the expectations on yield and how yield trades is a key factor in that. Here in the U.S., monitoring the yield curve, the shape, whether it's inverted, flat, or normal, things like that is an indication of how the central banks are interacting with the market on the short end of the yield curve, and how the market's perceiving future expectations for rates, which they base their investment decisions on. So it's very important to understand how the treasuries tie in with the overall economy. At 6 a.m. Central today, BOE announced that it's keeping its asset purchase program unchanged at 375 billion British pounds. It holds its rate at 0.5% as expected. At 7:30, about a half hour ago, initial claims came out at 287,000 versus 295,000, so slightly better. Continuing claims at 2.381 million versus 2.41 million, also slightly better. So Looking ahead, 9 o'clock Central today. All times are Central. Chicago time. 9 o'clock Central. Wholesale inventories are expected at 0.3% today. That's a half hour after the open. Wholesale sales, trade sales, also expected at 0.3%. At 9:30, we have EIA natural gas change. 109 is the expectation. There's a slew of the Fed has launched all these speakers today. Also the ECB. So I'm going to rattle these off, but it's really important to kind of maybe look at a calendar somewhere and note when these speakers are coming through, given the sensitivity of the market to what the Fed or the ECB is doing. At 8:45, which is 15 minutes after the cash open, we have Fed's Bullard, a non-voting hawk, speaks on monetary policy in St. Louis. At 10 o'clock Central, we have ECB's Draghi, neutral, who converses with Fed's Fisher, who's a voter. At 10:45, ECB's Nowotny, neutral, speaks at Sloan School in Boston. At 12:10, Fed's Tarullo, voter, Dove, speaks on bank regulation panel in Washington. 12:15, Fed's Lacker, non-voting hawk, speaks on labor markets in North Carolina. At 12:30, Fed's Fisher, a voter, speaks on global economy panel in Washington. And then at 2:40 p.m., Fed's Williams speaks on the economy in Las Vegas. So we have 8:45. These all times are Central. Add an hour for New York. 8:45, 10 o'clock, 10:45, 12:10, 12:15, 12:30, and 2:40 p.m. today. Now, any one of those could say something that could cause a flight to safety or a move out. At noon today, as far as auctions are concerned, noon today we have a 30-year note auction for $13 billion. Again, that's at noon, 30-year auction for $13 billion. That's what's ahead. Let's look at the charts where the story is told in the form of price and volume. So you're looking at my ES screen. I guess we'll take it from the top. Essentially, what the expectation was yesterday. If you were here for the Trader Bite, or you can always go back and review the video. Of course, they're archived pre-market video. Let's take a look at the action here and walk through what the market did. The expectation, the primary expectation yesterday was for the market to have a slight responsive buying push, and then ultimately to test 18 quarter, and the target below is 15 even, 18 quarter and 15 even. The market open had a two-way swing up to 30, down to 26.50. That gives us the OS, these dashed blue lines. Those are the opening swing high and low. So those are the initial. This is the spot where sellers first stepped in. This is the spot where buyers first stepped in. We always mark that. And then the market turns around and pushes to 33.75 and is unable to touch that level again for a while. Once it broke through the mid back into the OS, the expectations for lower low. And again, I was looking for a test of 18 quarter and then a push with a target below 50, 15 even, which is the point of control of the last balance zone below. These swings here are tough to trade because as it makes a new low, it goes and pushes to the other side of the opening swing and through the mid. Not easy to hold on, especially for someone who's trading in a binary way, trading one lot or whatever. Comes all the way back, puts in a weak low. We had a double bottom here. It's a very, very small double bottom. Puts in a weak low, pulls back to the OS high again, and then finally it fails lower and starts extending down. And game on for hypo 1. pushes down to 18, which is a tick beyond the initial target that we had. The fact is, when we put in that 18 low, that's a clear evidence that we found buyers that day when we put in that V bottom right here. This is clear evidence that the market had auctioned low enough, given the conditions at the time, for buyers to step in and to step in strong. And when they did, they took it all the way from 18.25 back to 45.25. That's an unusual range for buyers, and it was done on pretty good volume. The fact that they reversed this entire selling trade gives us a pretty strong low. So what we found is an excess low here. Buyers stepped in to buy it up and took it back up, and in the following days actually traded according to our primary hypos pretty much every day, as you've witnessed through these videos. The fact that we came back and broke through this LVN zone here at 35 and started to work through the stem that we left behind here, the fact that we came back here makes it so that the market is no longer sustaining the buying here, and the expectations for that low to be tested and broken. And it did yesterday. Took it out by one tick at 18 even. But again, once it took it out, it found buyers pretty much immediately. Look at this buying rotation, 6.5 points on a pretty strong delta. The delta went from a low of 27,000 to a low of 14,000, 13,000 contracts traded in this 3-minute swing or 5-minute swing on a pretty good rotation up. So we saw some buyers come in again at the same level. This 18 low against the prior 18 quarter constitutes a failed auction, which is a one-tick test, and then we see a strong reversal in the other direction. That's a textbook failed auction here that we saw yesterday. The market, the traders then bring it back down. The sellers bring it back down to beyond 50%. So I was on the fence here. I actually expected, once it came down this far, I expected it to push back through and for it to give us our next target, which was 15. But then buyers stepped in again for a 5.75 point rotation, and then it took it back into the IB and into the OS. And from there, we sat sideways until here we were just trading sideways until we get to our 1 o'clock FOMC minute release, and then from there to the moon, Alice. Then we start to look at the upper targets, which I mentioned yesterday: 39.75, 43.50, and on an extreme, this 50 area up here. And what the market does is it pushes through the 39.75. It just pauses a little bit, not much there, not much of a reaction. Pushes to 43.50, 43.25 for a 4.5 point rotation, and blows right through. Very strong action here, all the way through to the highs that we put in yesterday. It's just very, very intense. Very, very intense buying action yesterday. Now, that's how yesterday played out. I did not for a second foresee this much strength on the FOMC. The fact that they're saying that they're concerned about growth, the risks of global growth, I guess is helping everyone fall back into the central bank, feeding off of the central bank, teat of QE and low interest rates. It seems that's the only thing that drives our economy now. But this is what we had. We had a very, very wide range. The range was beyond 3 sigma on the buy side. 46 points on 2.22 million contracts, really strong. So with that being said, of course, this is an impulsive move here that we got yesterday. But maybe I'm crazy, but I don't believe this. I believe that this run up is extremely weak. Although the normal pattern for the way this trades, the way this auctions, is that we'll get a continuation overnight, which we did to 68.50, but that's it. 68.50, just 4 points, 4.5 points above the high. Did not quite push to 72.25, which was our old target. And then we have a weak high at 71, which is the next target up. But to me, this looks like it got way, way, way ahead of itself. I'm not bearish. I see the reversal here. This is an engulfing pattern. This is a bullish engulfing pattern here on really strong volume, very strong trend. But the structure, look at the structure of this, very, very thin. The market really got ahead of itself, in my opinion, and I feel like it has made this move on thin air. I know that sounds crazy. I know that everybody's talking about how the reversal was very strong and we expect to follow through day and stuff. But I'm going to tell you that there are several signs that tell me to be cautious on the bullish side. I am going to trade with the market. The market's well ahead of its prior value. If we look at the last few days, we've taken back the value of the last several days here and put in a point of control that's higher than those days and in balance with these 2 days up here. So I expect 71 at some point today. However, given the structure of this rally, I'm going to tell you that it's not built on a strong foundation. It really isn't. This reversal was very strong. This is not how the market normally auctions. And when I looked at the fundamentals yesterday, look at what happened here. So we have this pullback, we have this reversal, then the market comes down and it takes out this last low on the SPX cash at 2603. It pushes down to 25.25 yesterday. So it took out the low just like it did in the futures, and it pushed back up and through on this engulfing candle. But look at the 52-week lows. It's spiking up on this up move. The market on its, as a broad measure, the market did not really react on an underlying basis to this movement. Pretty good volume. The net issues were strong yesterday. Nothing stellar though. Volume was very, very good. The New York Stock net volume was very, very good. Much better than pretty much any session in the near past, not since March. But overall, the net issues not so great. And the number of stocks making 52-week lows spiked up on this move. I think I see some underlying weakness. The other thing I saw that supports the argument is if you look at the Bund or pull up a Treasury, it doesn't matter. If you look at the Bund, yesterday it moved up on the FOMC along with the DAX or the Euro stocks, pick your poison. Along with the Euro stocks, it made new highs this morning, pulled back, made higher highs, new all-time highs, so new all-time low yields on the 10-year Treasury before it dropped. This thing is pushing up with stocks. Look at how the DAX and the Bund are trading in synchronicity. To me, the relationship generally should be either money going into Bunds and out of indices, out of the stock market, flight to safety, or it's moving out of Bunds and into the stock market, seeking risk. And what they're doing is they're moving together. If you look at the euro, you have this incredible push up in the euro yesterday. Comes back today, makes a new high just like it did with the Bund, and then it just comes all the way back. It's almost at the LVN from yesterday. It's expected to get to 127.07, 127.08 today. That is not a continuation move. And why is it moving along with our stock market? Why is the euro moving along with our stock market? It's just there are certain circumstances where that happens, and it doesn't inspire confidence in me that this rally is really going to stick. So I know I'm sticking my neck out there by saying it, but if you've been following me for a while, all I'm doing is reading the auction. That's what I'm good at. That's what I trade. And what I'm seeing overall is, yes, we did rally up. We did put a point of control that's at the high. A lot of volume traded on the close here yesterday to shift the point of control. Therefore, we do expect a higher high. We did get it overnight. But overall, I am not inspired by this. In other words, on the long side, I'm not looking heavy to get heavy long on anything. I think that it's essentially gotten ahead of itself. Not because I'm bearish, not because I'm a perma bear and think the economy is going to crash and all that nonsense. I'm trading the price action. I'm trading the auction. It's simply because the rally seems to have been done very, very quickly with very little structure to hold it. If it had built HVNs all along and shifted the point of control up and up and up and up to finish at the high, I would say that that's a two-way auction. But you look at this point of control and it moves all the way from 28.25 from the morning session to right at the close. Right at the close, it moves to the high of the day with a ton of volume going off the top. It just isn't the way a normal trend day is expected to flow. So I'm going to say that I'm suspicious. I'm going to say that it's likely to pull back to 36 quarter, at least 48, 48 today, 36 quarter over the next day or two. I don't think this rally is going to hold. But again, I may be wrong. I've been wrong. I don't mind being wrong. I like to be wrong because it tells me that the other side has more credence and it's easier for me to trade the opposite of my initial idea if the market proves it. Anyway, I'm just reading what the market said. I just want you to kind of think about that and see if your bias is supported or negated by this argument so that you're making a sound decision. If we look at the overnight action, here it is pushing through. It pushed through on some Asian action, and then it pushed back through on some European releases. But then you look at how it cascades down with a very odd-looking profile, 3 distributions, and we're trading against the lower distribution. It held the mid, and it looks like it's trying to push the low. So for me, I'm looking for today. My primary trading idea is that the market's probably going to get caught up here. It may make a higher high. I would not be surprised if it made a higher high as a continuation as late money comes into the market. But overall, I expect the market to get stuck and possibly start to take some of this back from yesterday. Today, I'm going to tell you that I don't have a very certain or very clear view of what may happen, and I'm going to spend most of the time on the sidelines just nibbling at things. I'm not going to look for I don't have a hypo that says, like you've seen here for the last couple weeks or whatever, where it says I have a clear target below, a clear target above, and this is the higher probability play. I don't have that. I'm going to basically react today to how they treat this thin LVN zone that we left behind yesterday. Another view of it in time. This is what it looks like. You have balance down here, and then you have single prints forever, and then the market closes up at the top. To me, that's a market that's in a frenzy, and all that's happened is the FOMC has revealed that it's not so confident that the economy is recovering as it was confident a couple weeks ago or 3 weeks ago. It's not that confident, so chances are it may not raise rates as quickly as possible. I think taking that and running with it like they did, maybe they're getting a little bit ahead of themselves. But I'm not a fundamental trader. I'm just looking at the technicals, and the technicals to me look like, yes, there's strength, there's continuation. This is an impulsive move, and an impulsive move is likely to have a continuation.
We'll look for that continuation, but overall, I think we're likely to revisit the scene of the crime. Remember that we're likely to revisit the scene of the crime, which is in the 36 to 33 area below. That's my expectation. Again, I'm sitting on the sidelines today to see what happens. What happens as the market opens. I'm going to look for the dominant hand, and then I'm going to look for areas to lean on, price structure, price action structure to lean on to go with the dominant side. So whether it's a pullback or whatever, that's how I'm going to trade. I don't have a clear hypothesis today, given the action yesterday and the fact that it left very poor footprints for me to read. So I'm going to wait for this to play out and see today how things happen. So for me today, it's mostly going to be scalping, scalping, short-term scalping to a little bit longer-term scalping. I'm not going to take any push. I don't have an expectation for a strong push one way or another. So I'm going to wait for the market to feed me the information and then go off of that. I know that's a mouthful. I know that's a lot of information. I'm just sharing my honest opinion with you as someone who's watching the market day in, day out, and been trading it for quite some time professionally throughout my career. Hopefully this is useful to you. Hopefully I didn't confuse you. Good luck, and just whatever you do, watch your risk. Yesterday, I saw some people really get hurt because they're just not respecting their risk. Good luck.